Hi, I am Madi Zusack with ASMC. Thank you so much for joining us on our call today. We're going to be discussing renovation loans and how they can benefit your clients, or if you are a client, you're interested in it, please stay tuned for more information, how this product works, and what you can include. Yes, you can even include landscaping if it brings up the value of the home. So all that will be discussed. Please stay tuned and let me know if you have any questions at the end of the video.
All right. So with the renovation loan, we'll just talk about here in a minute some of the features, eligible and ineligible repairs, and then kind of what that process looks like. Let's go to the next slide, Maddie. So this renovation loan that we're talking about specifically is going to be the Fannie Mae home style renovation. So it's a conventional loan. I don't know if you guys have ever worked with the 203Ks before for the FHAs. They're a great program, but there's a lot involved with them, right? If you've done them, you've had to find the HUD consultant and work with them and things like that, and it's a pain, yes. The home style renovation is the Fannie Mae version of the 203K, but it's great because we don't have a HUD consultant involved. So while I understand their purpose, we don't have to worry about those HUD consultants with the Fannie Mae home style renovation. So it's basically a loan where the client can come in and just make a 5% down payment. They get to select their contractor. We're not as limited as the 203K is that we are with like having to work in a certain amount of a contingency and all of these additional things. So it's really a great program, the Fannie Mae is. It's a lot easier and smoother to work with than the 203K. There's less parties that have to be coordinated. And again, it's just 5% down on a primary residence. So I know a few years ago, especially during COVID, this was a great program we did a lot of because, you know, houses were moving so quickly. People were wanting renovations while the rates were down, you know. So it's great for someone that may not have the cash to be able to come in and just do everything they want to do to the house. That can be financed in, right? So that's where this program is super huge. And it'll be for primary and second home. This is just a quick little slide about kind of some of the minimum requirements. So we do have a 680 credit score requirement. Seller can contribute up to 6% of the closing costs. That's just based on standard Fannie Mae. So in a 90% loan value transaction, the seller can contribute 6%. It's 3% if it's a 5% down. And they've got 12 months basically to get the home renovations completed. If it is a primary residence, we can do 2 to 4 families. So maybe you have someone that wants to buy a duplex and live in one side of it, and that needs some repairs. We can do the repairs to that duplex. For a second home, it's really just going to be a single family property. Oh, go to the next slide, Maddie.
Right. So going back to that, if I can interrupt, so this could be used for an investment property. Is that what you're saying?
No, not with an investment property, just a primary or a second. But if it's a duplex that they're going to live in one side of and rent the other side, that's considered a primary.
Okay. Okay.
Yeah. So we do have this other renovation loan that we can do. It's a portfolio loan here. It's essentially that 2-time close we were talking about for the construction loan earlier. It's basically the same program where it's a 12-month interest-only loan that we can do instead of the Fannie Mae home style renovation. Most of the time that Fannie Mae home style renovation is going to make sense. But again, maybe this is something where the client owns the home right now and they want to buy this other home that they're going to fix up. And once the new one is fixed up and done, then they're going to sell that other house and want to apply their net proceeds and have that lower payment. That's where this may come in and make sense. But most of the time that Fannie Mae home style renovation is going to make sense. This is just another option we have. For the most part, they're going to function essentially the same way as we would have the contractor picked out. We get that contractor's bid. We order the appraisal based on those plans and specs. And then other than that, it's kind of a normal renovation transaction. And with this 2-time close, it's just going to be for primary residences. What's also cool about this is Maybe you have a client that owns their home already and they need you to help recommend a contractor or things like that. We can also do it if the house is already owned. Another big thing I want to point out, if this is even, big there, you can use this home too, as Madi was saying, or excuse me, these programs, you can use them to just do a backyard. Maybe someone just wants to add a pool. We can do this instead of them having to get a separate pool loan. So there's really just kind of a lot of ways that these programs, renovation programs, can be used. Again, for as little as just doing countertops and flooring, or maybe they need to, add on to the home and do an addition, or kind of rework the floor plan to, turn a second living area into a bedroom or something like that.
So Libby, is it like a second mortgage? You must use the whole home.
We refi the whole home. Yep.
So we have a couple of options, Beth. So what we would either do is we use this program, or we do cash out refinance. But sometimes when a house does not have the renovation, it doesn't appraise for more. So if you do a renovation, it might appraise for more. So this might give more extra value to the house. So this is when let's say a client doesn't have enough equity in there to do a cash out refinance to get their own contractor. If they send everything that they want to do to the house to myself and Libby, they can do essentially an analysis on it, saying, hey, okay, the value of this house now doing these projects will be now more, so we could refinance. Depending on the situation, of course, Libby, is the rate for the renovation a little bit higher? Should we refinance after to get a lower rate, or do you guys have the competitive rates?
Yeah, so these basically we price just like we would any regular purchase transaction. So with renovation, there is a little bit more risk than there is a regular, just purchase. But typically the rate is only going to be 1/8%, maybe 1/4% higher on these renovation loans. It's pretty competitive. So it's not typically going to make sense for someone to refi out right away if it's that Fannie Mae home style renovation. Now, if it is the portfolio transaction, with it being the 2-time close, they have to refinance at the end into that permanent mortgage. But if it's that home style renovation, let's say if a client came in and typically the rate would be 7%, if they weren't doing reno, with the reno, it might be like 7 1/8, 7 1/4. So again, not a big difference where it's even going to make sense for them to refinance at the end. And just as you were saying, Madi, that's a great point. I mean, if someone already owns their home, cash out refinances might make sense, or maybe they can get a HELOC or something like that if they have enough equity right then, right? What's cool about the renovation program is it helps us look at that loan to value based on that as completed value of the home. So it just taps in to help us with loan to value. So maybe someone bought a home 2 years ago and they don't have enough equity to do a cash out based on the property as it is right now. That's where that renovation loan might make sense for somebody like that, to be able to use that value to help drive a loan to value that makes sense to be able to finance that renovation.
So Libby, how would you, if this, let's say Beth finds the perfect house for a specific client, and it's, the kitchen's outdated and bathrooms are outdated and it's just not what they want, how would we do that in a purchase transaction?
Right. So with the purchase transaction, you're still going to go under contract like you would a normal transaction. So you don't have to worry about any of the value or any of the bids that they're wanting to do for the work. You don't have to worry about that as far as the contract goes. I will say typically we want to ask for about a 45-day close on the renovation loans, just because before we can even order the appraisal, the borrower is going to need to find their contractor that they want to use and get a bid for that work to be done, because that's what we need to be able to order that appraisal. So I always say when you're going under contract on something like this, we want to ask for a little bit of a longer closing time. But your first steps, if the client says, hey, I think this house could work, but I need to do, X, Y, and Z to update the kitchen, that's where you're going to want to go, okay, let's go ahead and you find a contractor and let's get them in here as soon as possible so they can go ahead and bid out that work. So that's really the biggest things on the renovation loan is just that upfront of making sure that we're getting the contractor in as soon as possible to get that bid. Because once that's done, then it's for the most part really a standard loan process after that. It's just having that little bit of work up front to get that contractor in and get that bid done and provide the bid to us, so we can know exactly what this transaction is going to look like.
So another question, and I know every agent's going to ask that. So let's say we have a $400,000 house. We get a bid for a new kitchen, new bathroom. It's going to be an additional $40,000. We understand that sometimes the value is not dollar for dollar. So how do we make sure that the renovation and the house purchase are going to appraise?
So that's where, yeah, of course, as the agent, hopefully that's something you guys will have a little bit of a good pulse on, just you being the market expert. Definitely it's something that we want to look at the bid. If there's something that stands out to us, I always use this example, even though it's not real time, right? Like, if someone's going to put a gold toilet in a bathroom, it might be really expensive, but it doesn't mean that that value is going to be offset, right? So if we start seeing things, and as well, if you see something that seems excessive and might not, make sense to get the value we need, that's definitely a conversation that we'll want to have. But we won't know exactly for sure until we get that appraisal done. But once that appraisal is done, if for some reason we were looking for, let's say, a 440 value, but it came in at 435, let's say. So we're about $5,000 short. If the client wants to go ahead and pay that out of pocket $5,000, they can. But if not, that's where we might need to just look at that bid and go, okay, maybe in this room, maybe we were going to put hardwoods in the whole house. And maybe what we need to do to save a little bit is just do hardwoods in the main areas and carpet in some of the bedrooms, right? So then we can go back and revise that bid a little bit to get that in line with that value. So that's really going to be that biggest challenge is maybe the value sometimes on the renovation.
So do we get the appraisal before we get the quote, or do we have to get the quote and submit that with the purchase?
We have to get the quote to submit that because that's what's going to tell the appraiser what all work is going to be done.
Perfect. So Beth and Clay, does that make sense? So if you guys do find a house that a client loves, we need to get a GC to give us a quote before we can order the appraisal to see if the value will be there with the renovation that they're going to accomplish. So if you guys have a great GC, a couple on hold, like standby, kind of like, having a loan officer that you can refer to immediately that can respond quickly so we can get the appraisal ordered. That seems like the best way to do this.
Agreed.
Definitely. And I'll say too, again, client gets to select the GC, right? So if you've got someone to refer to them, that's great. The GC does have to get signed up with us just like they do in the construction loan. So that's kind of why we outline a 45-day timeline for these renovation loans. It's not to say that they can't go quicker than that, but typically the first 15 days or 2 weeks is finding the contractor, getting them signed up with us, getting the bid done and sending the bid to us. And then after that, it's a standard loan process. But we can always get those contractors signed up front. So like if you guys have someone that you work with that you think might be a good resource, we could go ahead and get them signed up with us before you even have a client that they're going to work with. It's similar to the builders where we're just kind of looking to make sure they have experience, licensing, and insurance. So these applications that they fill out to get signed up with us are fillable PDF forms. They're really simple. They don't necessarily have to be licensed as a plumber, right? So maybe you have a general contractor that subs out the plumbing work. That's totally fine. We understand that that happens. We're just wanting to get copies of any licenses they do have, but we can always get these builders or contractors signed up ahead of time to help speed up the process a little bit. But if they're not already signed up, it's fine. We just need their contact info, and Madi and I will coordinate getting them signed up with us. It's more about just everybody being on the same page between us and you guys and the client to know, hey, up front, we just need to find that contractor, get their bid done, get them signed up, and then after that, it's a normal transaction. So,
do you have a minimum amount of time that this loan would need to be in place? In other words, if they use this to sell like you would often do with a HELOC, they use this to position the house to sell down the road, and then they went, we can do this now.
Right. So with the Fannie Mae home style renovation, typically they need to have the loan for at least 6 months because as the lenders, we get hit if they end up, getting out of the loan within 6 months. Doesn't mean that they can't do it. That's just not really what the program is designed for. It's more of a long-term program. However, that two-time close or the 12-month interest-only renovation loan we have, that's great because that is an interest-only short-term loan. So if that one pays off in 6 months instead of the 12 months, that's okay because that's not a long-term loan that's being held by Fannie Mae or someone like that. So if it is something where they want to use the loan for a house that they own right now and they're positioning it to be able to sell in maybe a year or 8 months or whatever, then that interim loan, the 12-month interest-only loan, is probably going to make more sense for that client.
So forgive me if you went over this, but so how does this as a cost of money compare to a HELOC?
Typically your rates are going to be a little bit better on something like this compared to a HELOC. And then of course the HELOC, right, that's where they're going to be able to pull and pay and pull and pay. With the home style renovation, it's just a straight 30-year amortization. So typically those payments are going to look a little bit different and they have one payment instead of two, right? So the HELOC, they may have two payments. With this one, they'll just have one. Maybe it's this is where we need to just kind of run the numbers. Sometimes, even though they may have an existing mortgage that has a lower rate on it than what market rates are right now, depending on the amount of work that they want to do. I mean, we've done this for $100,000, $200,000 worth of renovation work, right? So that's something where initially they might think, hey, a HELOC would make more sense because I have this lower rate on my first mortgage, but I could do a HELOC for this and it would be higher. Sometimes our product actually still makes more sense and makes a lower payment for them when you look at actually the blended kind of rate between the two. So HELOCs are typically going to have that higher rate in different terms. Sometimes you might have like a 10-year HELOC, so it may not be amortized out over 30 years as well. So this is going to be that 30-year amortization with that one just fixed rate and one payment.
So real quick, I want to make sure, Libby, I understood your question and best. So if a client purchases a home and immediately realizes like, hey, I want to do some renovations, they would have to essentially wait 6 months because the first initial mortgage does normally have a 6-month waiting period. And yours, is there essentially an early payoff penalty if they, let's say, sell the house within the first 6 to 12 months?
Yeah, so maybe they bought a house and they decide they want to do renovation. This is just a Fannie Mae renovation loan typically that we're going to do unless it's that 12-month interest only. We can come in and help them do that renovation right away. It's not to say that they have to have another mortgage for a certain amount of time, but it's just, industry-wide, typically, mortgages are wanting to be held for, more than 6 months or so, right? It doesn't mean that we can't do it, and it doesn't mean that they can't come in and pay us off early, even if they use ours to do that. But that's, again, where we just kind of want to be cognizant and understand what the program or what the intention is, because maybe the home style renovation isn't the right program and we do need to put them into that 12-month interest only, right? So it's just really kind of understanding, I think, what the intention is so we can help put them in the right program that makes sense for them too.
So the biggest thing, Beth, is if a client receives a mortgage and then they get this one and then they pay off their first mortgage, most likely that loan officer will have to pay back all their commissions. So just be mindful of that. So we definitely don't want our partners to get hurt when they pay off the loan early. Sounds like this, Libby, will that have the same effect if it gets paid off 6 months before?
Yeah, so if we come in and do a loan and then it gets paid off within 6 months, if it's the Fannie Mae home style renovation, then yeah, we're looking at that early payoff. It doesn't mean that the client can't do it. I mean, we can't force anybody to stay into a mortgage, and the client is not penalized. It's just about the industry, really, and us as the mortgage company being penalized for that. In the Fannie Mae home style renovation, sometimes there's not even the opportunity for it to pay off early in 6 months because renovations might take 6 months depending on if it's something big. But again, if we know that that's what they're looking at doing, we just probably want to look at putting them into that 12-month interest-only loan. It's actually going to be more beneficial for them because then they get to make interest-only payments instead of full payment. So it helps the client there, right? And then it helps to where we don't have a penalty because with a 12-month interest-only loan, there's no penalty for us if that gets paid off before the 12 months is up. It's really just on that 30-year Fannie Mae home style renovation where there's that.
You're still muted, Beth.
I'm all over the win-win. I'm just wanting to make sure, we're in a period of time where we need options, and they are not always traditional. The approach or, the financial institutions, I think need to figure out this whole short-term thing, because I've asked this specific question before. And if you're looking for feedback from the field, this is it from my little neck of the woods. Is financial institutions need a solution that is very short-term to do a lot of things.
Yeah. And that's where we have that 12-month one, because there's that short-term one, right? And that does make sense. Maybe they need to do it to be able to list their house, as you were mentioning. That's where this 12-month interest-only loan is great, because not only does it have a little bit of a lower payment because it's just interest only, right? But then we're not having to worry about these early payoffs. So that's why we have both of the options available, because sometimes one makes sense and the other doesn't,
Perfect. Thank you, Libby, for answering that. So we'll just move right along. We don't have any slides left, and then this will wrap up construction and reno.
Yeah, so basically, again, whenever you're writing your contract for the renovation, if you're writing a sales contract, you're just doing it for that price between the borrower or the client and the seller. That purchase agreement is not going to include the cost of repairs. That's where we'll have the bid from the contractor, and then we'll do the work of course, just marrying the two to come up with that overall price. So yeah. Pretty simple as far as the contract side goes of things. Again, that's just where we want to be cognizant that we may need a little bit longer of a closing timeline to allow for that contractor to come in. Just great resources. If you have any contractors you work with, I'm sure you do. They're great resources. It also helps you be a referral for them as well, because sometimes they have clients that come to them and they need, options too. Structural engineers, other financing institutions that don't have renovation loans, they're sometimes good resources. Investors can be good resources. So again, this is just another way to help give you options to offer your buyers, right? Or sellers, maybe a seller should do some repairs to their home and it's not in a great condition, but they don't want to do it. Well, great. Now you know that they can have a buyer come in and use the renovation. So I always say you can pre-approve them, Madi, and then they can go find a reno, find construction. Like you can give them one pre-approval that's good for whatever they want to do.
Exactly. All right, Libby, you've been amazing. Thank you so much. I'm definitely going to see if we can do another class. I think this was just the beginning of our relationship growing to partner together. So I'm super excited. You're so knowledgeable with this stuff. So I'm not going to lie, I'm not an expert in everything. So I'm so happy to have an expert on this call to walk us through all this.
Yeah, definitely. And that's what makes these programs work well, right? Is just having people who know how to do them. Sometimes they sound scary. They're really not bad. It's just knowing what that process looks like. So happy to do this and help out in any way that we can.
Thank you so much for joining our call. I hope it was educational for yourself or for any clients that you might have in the future. Please let me know if you have any questions and hope to work with you soon.